Hello everybody, and welcome back to another video. Today we're going to be reviewing a trade I took on the S&P this past Friday. So as always, the foundation of any of my trades needs to be the higher time frame narrative. So heading into Friday, what was the daily chart looking like? So we have ES here on the left and the NASDAQ daily chart on the right. So you can see the previous day, right? On the charts right now, we don't have Friday's trading. So this last candle that you see here and this last candle that you see here is Thursday's daily candle. Okay. So we've been watching this as a draw, this October 12th daily high here on the S&P as well as NASDAQ. So if you can see, obviously, Thursday we came just short of purging that buy side on NASDAQ, again on S&P as well, but very, very close there on NASDAQ before a short-term sell, short-term retracement. Now, if this was a 1-minute chart or a daily chart, I still wouldn't feel comfortable shorting until that high is purged, right? Because what does retail think that this high here is now that they see this? They think that this is safe resistance. So this is just a short-term retracement to trap those traders who think that we're going to go lower now and leave these highs as resistance. So again, going into Friday, I'm thinking I still want to go see those daily highs get met, get purged on both ES and NASDAQ. It's just a matter of if we'll get the setup today, so Friday, or if they're going to wait until next week. So again, higher time frame narrative, order flow, we've been bullish. This is the foundation of any of my trades. Okay, we need to understand where price is gravitating towards on these higher time frames. Okay, so after understanding that higher time frame order flow has been bullish, and we believe that the draw on liquidity were those daily highs, this is what price looked like before New York open on Friday. So first off, what do we see? We see sell stops being ran. Okay. Then we get this clue. We had an SMT with NASDAQ. ES was not able to make a lower low here, while NASDAQ was. Okay, so that's that crack and correlation that ICT talks about. And it's not just for me personally, not just a one-trick pony, right? One size fits all, where I see an SMT and it's immediately I'm going for longs. It's just one piece of the puzzle. So if we see this SMT, right, a sell stop raid, and we're bullish on the higher time frames, these are the things that we want to see. Further, we have this hourly fair value gap that's not tapped into yet going into New York AM session that we're monitoring. And specifically, you can see here, when I have these larger higher time frame PD arrays, whether it's a breaker or a fair value gap, right, I want to mark out the quadrants of this fair value gap. So I'm taking my fib from the high of the fair value gap to the low, and I want to see if there's any sensitivity around 25%, 50%, or 75% of this hourly inefficiency here. So before we get to the long that I took, it's important to understand what occurred before my entry. So as you can see here, we had not the best price action, right? A lot of chopping here, but eventually we did get down to this hourly fair value gap. Again, this purple box is that hourly fair value gap that we were just discussing on the previous slide. And we're purging these equal lows, okay? So 950 macro, what do we expect? This is where we expect to see the inception of a setup for us, right? This is your silver bullet short right here, right after 10 a.m. Market structure shift, fair value gap, targeting sell side, and this hourly inefficiency. Now, I personally did not trade this because, what did I say? My higher time frame bias is bullish. So I will take trades like this sometimes, but I'm personally just waiting to see if we get a long setup when we get down to these levels, right? I'm perfectly fine missing this move. And again, if we get down to these levels and I don't get my long setup, who cares? Eventually I'll get a good setup that I see. But this is what I wanted to see. I want to see how we act once we deliver down to this hourly fair value gap. Okay, so after understanding what the 950 macro provided for us, This is my entry. Okay, so I will walk you guys through this, how I internalize this price action. So the 950 macro sends us to where? This hourly fair value gap, but more precisely what? The first quadrant, the 25% level of this hourly BISI, right? So I see price hitting it here once, hitting it here twice, wicking into it here a third time. After we get above, after we price into this 25% level of the hourly fair value gap, the bodies are respecting the high of the fair value gap. Okay, so this is a footprint of the algorithm. So once I see this, I want to wait to see if we clear this structure, right? Because this is a respect of this higher time frame level. It's an algorithmic signature, right? That I want to see if I'm bullish. Okay. After we clear this structure, what do we see? I want to see more evidence that discount or bullish PD arrays are going to support price. So here we have what? A down close candle supporting price. A down close candle supporting price. A down close candle supporting price, right? Now we have what? Low, high, lower low. Once we clear the structure, that's a bullish breaker. This is a SIBI, but once we clear the structure and close above it, it's an inversion fair value gap. So if we were bearish, this should have acted as resistance to push us lower. So the way I internalize this is that after we expand to and through this, closing above the SIBI, and it becomes an inversion, it's the algorithm showing me that it's not respecting a premium PD array. Okay, so that's what I want to see immediately after this algorithmic signature, right, to this 25% level of the hourly fair value gap. This is what I want to see. I want to see a disrespect of a premium PD array. That's exactly what we get. So we have the inversion, a breaker, and what? A fair value gap. Okay, so those are three PD arrays where you can form risk on, where I can form risk on. Where would I put my stop loss? A couple ticks below this breaker, allowing for wicks if we do want to wick down, right? Best case scenario, as I'll discuss in a second, we don't wick down there, and you can see we didn't here, but my stop loss is below mean threshold of this breaker, allowing price to wick down there if it wants to, okay? But looking deeper at this, what is occurring after we close above this inversion? My entry is here. This candle, once we get back to the top of this inversion, I'm in a long. These two candles, these two wicks right here, are where I'm watching, where I'm determining the likelihood of me being onside or offside. Why? Because one, I just entered, obviously, but it's coming back into the inversion. And if you saw the algorithmic signatures video I did, and I'll link it in the upper corner right now, I recommend you go watch that. But what do we say about CE of these inversions? We want to see them support price. We don't want to see price get to the lower portion, because if the CE supports price or price fails to get to the CE, that's the algorithm showing us it doesn't want to go down there, and it's going to reach for premium, reach for buy side liquidity, okay? So we have what? Inversion CE, this white line, which is also, if you look closely, this BISI here, the blue box, it's also the CE of this BISI, okay? So again, my stop loss, I don't just jam it up there because that's best case I want to see. That's just me tape reading after I'm in the trade to see the likelihood of me being onside or offside. You can see here, we tick one little tick below the CE of this inversion. But where are we going to? This bullish breaker, which is also an order block. Completely permissible. After we wick to this level here 2 times in a row, what are the bodies doing? The bodies are respecting the high of this inversion. Okay? So I'm starting to see, after I see us wick away and the bodies respect the high here, I'm confident that we're at least going to go get this internal range liquidity. Okay, that's my first target. It's my second target. And then my third was previous day PM session high. And before I forget to mention, I will link in the description, but I live recorded this. I screen recorded the actual execution I took, and it's on my Twitter. So I'll link that Twitter post from my page in the description below. Okay. But more importantly, when is all of this occurring? All these things we just discussed during the 1050 to 1110 macro. So if we already met this higher time frame objective and our higher time frame draw, we believe is those daily highs. So we're bullish. This is what we want to see when we want to see it. This is how I use time and price. Okay. So even if I saw these signatures outside of a macro, as long as I can frame risk, I would be okay with entering a trade. But the fact that it's occurring during this macro time makes me even more confident that it'll deliver. Okay. So this is how I utilize time and price, internalizing these algorithmic signatures. This is why I have these higher time frame levels on my execution chart. Again, this is a 1 minute chart. Okay, so lastly, as you can see, we got target 1, target 2, target 3. And I'm sure some of you know we went and expanded further to those daily buy side liquidity pools on both the S&P and NASDAQ. But I kind of want to show how I internalize this chunk of price action here. Okay, so we get target 1, this internal range liquidity. But what does that make this candle? Low, high, lower low. That makes this a bullish breaker. Okay, so we close above this. Now I want to see this support price. You can see in here, we have a fair value gap, which in hindsight, of course, is a breakaway gap. It was not tapped into. But once I'm seeing this occur, I'm not jamming my trailing stop loss up into this just to say, okay, I want to see it be a breakaway gap. I'm trailing my stop loss right there. No, I'm not in a rush to move it because I'm allowing price to get back down into here if it wants to. It's permissible for price to come back down into this fair value gap and then take off. However, best case scenario, again, tape reading price, this is what I want to see. Once we displace away from this breaker, on top of the things we already discussed down here, this signature down here off the hourly fair value gap, the fact that we displaced away from the breaker after closing above it and did not even tap into this fair value gap at all makes me even more confident that this is going to be hit and this is going to be hit. Why? Because again, for lack of better terms, the algorithm doesn't care to go down here and even tap into this fair value gap, right? By extension, if it doesn't care about discount PD arrays, discount inefficiencies, it should spool towards what? Buy side liquidity here, buy side liquidity, a session high from yesterday, okay? During the 1050 macro, when we want to see this spooling of price, okay? So again, I'm allowing price to get down into this if it wants to, but best case reading price, the fact that we leave it open, and again, obviously these as well, that's exactly what we want to see. It's the algorithm showing us that price is in a hurry to reach these buy side liquidity pools. So thank you guys. I hope you guys learned something from this video. Again, I will link that live execution screen recording from my Twitter in the description below, as well as our free Discord will be linked below. Okay. Make sure you guys like this video, subscribe, all that yada yada for more. But I hope you guys learned something. Let me know in the comments what you guys thought, what you guys want to see in the future. And I appreciate all of you. Enjoy your weekend. And I will talk to you guys soon.